Good weekend all. Ira Epstein with your SPDR ETF weekend edition of your videos for this Friday, the 6th of March, 2020, just around 5 p.m. What a week. Before I get too far, if there's certain ETFs you want covered, a special that I'll throw in every now and then, write me on the YouTube channel. We'll take a look at it, and if we like it, we'll put it up and we'll take it from there. My goal here when I do these is not to replace my afternoon SPDR ETF video. In that one, I cover all these charts that you see behind me typically. I didn't do the PODX this week. I did instead a solar one. But I think that you'll like what you see. Now, if you haven't tried my afternoon SPDR ETF, it comes out right around 4 o'clock every day. And the reasoning for that is by then we got the closes in. I give you the whole view. I'm telling you where I think you should buy and sell in the market that I don't do here. Here I'll talk what the generalities of the market are, and that's how we're going to keep it. You go to our website, www.iraepstein.com. On the right-hand bottom, it says free trial. Sign up there. We're shortly going to end this round of free trials. You can always get a new one if you haven't had one, but we keep a pretty good list of it. Let's take a look and just go right to the charts. By now you know that it was a wild day, wild week in the stock market. I've been doing this since 1969 in the futures business. I've never seen volatility like this. I lived through the '87 crash. In fact, they had a stock firm. I can go on and on. This is extreme, to put it mildly. In the last couple of minutes in the stock market today, half hour, I think it rallied 500 points. It's nuts. So we look at the technology sector. We know that the market's had a huge drop in it. There's a gap in the chart. Gaps often get filled, not always, but often. We'll see if this market can do that over time. We can look on the swing line. Now, this is the same chart. I'm putting a swing line study that I wrote. I wrote this many years ago because I wanted to know, is the market trending? Let me define a trend. A downtrend's made of lower highs, lower lows. An uptrend, higher lows, higher highs. You're not in a trend when you have a higher high and a lower low. I can easily see it. The numbers are also there. Now, if you have our charting software, each one of these other numbers can show up, but I don't want to bury you with numbers here. But it depends how you'd want to look at a chart. What do we have right now? I'm going to repeat it. We had a market that let go hard. You went from the 103 area roughly all the way down into the 84 area. And this week we had a bounce that carried you back to 88.91. Okay. Where's the resistance of the market? It's the 18-week moving average of closes. Now, why is it resistance and not support? Or is it support? Well, if you look at the 18-week average, it's 92.40. When the market is underneath the 18-week average as it rallies up, I look for that to be a resistance point. The 18-week average also filters for me other studies. I look at the relationship of price to that average. If the market is under it, the bias is down, and then other of my studies, I put a bearish bias in. When the market's over it, I have a bullish bias. In the other studies, I'm looking for reasons to be long, reasons to be short, or no reason. And this is a no reason. Higher high, lower low. I then look to see Bollinger Bands, be it a ETF, a SPDR, a futures market, an options market. Markets, if you can put them in numbers, the Bollinger Bands, an algorithm, if you place it on the chart, will trade within that band 95% of the time. The rationale is that think of this as a restraining number and this is a supportive number. 95% of the time the market will trade within it. Some markets do a heck of a better job than others, but that 95 percentile is still going to be there. This is one of these markets that's paid really good attention. It would rally to it and then get thrown back under it and do its job, allowing, if you had wanted to buy breaks, well, you've got to figure out what that number is, and we teach that in our charting course, at least a guide to it. Everybody has different methods. Momentum is measured to me by the slow stochastic, and on a weekly chart, it's either pointing up, down, or it's neutral. It is not overbought or oversold on a weekly chart. Dailies it does. I have momentum pointing down. the bias down, and I'm void of a trend. If the market falls, I'm looking for the Bollinger Band for support, resistance, the 18-week average, and of course we know the Bollinger Band's another resistance point. When I come to the industrial sector, the market had gone into a free fall over the past 2 weeks. Market was under the Bollinger Band and everything else, down 12% for that week. Yeah, it's not a misnomer. That was there. We're still down, but we've bounced back and much closer now, as you can see, to that Bollinger Band, but still under it. So the market is still fighting a battle. That number's 74.96. You're still under it. Where's the bias? Down. But are you trending? Well, you got a higher high and lower low. Pretty stiff resistance at the 100-day average now, too. When you slice through a 100-day average to the downside, on the way up, it's often a resistance point. The word is often. The energy sector, we have chaos. And the chaos has come because OPEC and Russia have divorced. Russia does not want to cut more oil. They're willing to live with the deal they had set up a while back, months ago, but they're not going to go in for new cuts, they said. And with that, a free fall has been happening. Now, we saw this market in this sideways action, if you look at it, fighting a long-time battle right there. It then had lower highs, lower lows. Admittedly, it stopped at the Bollinger Band on the down and on the up. It hadn't broken out of either. You need to get 2 weeks in a row under a Bollinger Band, in my opinion, to say it's broken out. That did it. So even if it climbs back in, I'm in the bear camp. And you can see what the market did, and then it started its next decline leg. Is the market ahead of itself? Probably. Could it go lower? Of course. Now the question is, what happens? A large part of this is not just the supply from OPEC. The question is, how bad does COVID-19 hit the U.S., Europe, Japan, Korea, and all the economies that consume energy? China, as I understand it, is coming back online. They're bringing about 60 to 70% of the workforce has come online. Smog's back in the air. We're seeing that there's electricity usage come back online. So you can look at certain elements there and see they're coming back. They're not normal, but they're coming back. Problem is, they come back and the rest of us go down, you're not any better off. QQQ, the ETF that follows the NASDAQ. Momentum pointing down. Battleground 18-day average. But what really happened was back here. Look at this trend, how it had been higher lows, higher highs. Momentum still up. This is the week, last week, where you took out this low, and that broke the trend. Now the battleground, if you rally, is probably the 213 level because that's the 18-day average of closes. And the market, you can see it's fighting its battle right in that general zone. If you take out this low that you made last week, look for the Bollinger Band potential between that and the 100-day average to be another support level. As for this market just picking up and running, I'd ask you, why? You better get some really good news on COVID. I just think that there's a lot of people now that got caught and the market needs some time. If you look at the U.S. economic numbers, I've got to say this, they look stellar. Job growth, every number I'm looking at, low interest rates, but I'm always nervous when you start seeing a bond market do something that the Fed wasn't ready for. You realize you were at 1.3 or so starting the year out in the 10-year note. You're at 0.773. Something has spooked these markets. Fed cut once. The percentages, they'll cut again at the March 17th, 18th meeting, getting very high. Lower highs, lower lows on emerging markets. But you know what they're doing? This has done its thing. I'm wondering if it's not trying to move back into the Bollinger Band. I'd look for resistance between the lower Bollinger Band and the 100-day average. That's where I think you're going to fight a battle. In the gold market, I like what gold did. If we take a look at last week, you had an outside week down. I have a rule on outside weeks. That high should not be taken out. My problem with my rule, and there is a problem here, is that normally I'm looking if it's taken out to go to the closest moving average on the upside. I have none. They're all below the market. Or the Bollinger Band, and it's already over it, and it took out that high. I've never developed a rule when that happens, just the way that it is. The trend is up. The battleground, staying over that upper Bollinger Band, not easy. And momentum, instead of pointing down, it had flipped last week. It's again gone flat. I understand what's going on with COVID-19. I understand how people are positioning themselves. In the gold miners, you're neutral. You've come down here fighting at this 18-day average, staying within the Bollinger Bands. This was the peak in the market right here. Watch what happens. You came up, you collapsed, went to the lower band as well, and now you're bounced away from it. I don't see anything in this chart. See a higher high and lower low, just a flat market. TLT, this is what scares me. This is a breakout to the upside that's merciless. It just keeps running. So the Fed joined in the party. The market was way ahead of the Fed. I don't think the Fed had to make its cut then. I think it could have waited for this meeting. I frankly think we wasted that whole bullet. That's my own opinion. And I think that unfortunately, history shows that when the Fed in between meetings makes a surprise rate hike or cut, typically it's been cuts with the economies the way they are, what takes place is at the next upcoming meeting, they cut or go the same direction again. I think they're going to cut again. I mean, how many bullets do you have left in this gun? That's what we have to be scared of. Then we get to the euro currency, which has just traveled and widened its Bollinger Band and not done a lot. This was a market caught in sideways action. I think you'd agree with me. I'm going to say that the first challenge of an upper band is where I think pros take money off the table. First challenge of a lower band is where I think pros take money off the table. And then the market tried to break out, you can see that, and it turns on itself. You had the 2 weeks under right here. And from there, we've had the panic, and I call it a panic. And that's because U.S. interest rates collapsing, and we're the biggest economy in the world. If we get COVID-19 and it starts shutting down parts of our economy, which it's doing, a lot of fear. Remember, South by Southwest was canceled today. So how many people visited that in Austin? I think I heard 400,000 people. All that lost money. What's going on in Seattle and other places is people are taking all these things, be it Costco, whatever, they're just grabbing products, price gouging. They're not getting these products to go out and go to their restaurants and spend money. So there's another impact happening everywhere. We have to pay attention to all that. That's my point. So if you like what I'm doing here, I think you're going to really like our SPDR ETF video that I put out at 4 p.m. Go to our website, www.iraepstein.com. Under free offers, sign up for it. I'll be happy to get it out to you. I'm Ira. You have a great weekend. I'll see you all Monday.